G'day. It's Stefan Angelini from Angel Advisory on the 12th of April, 2023. Thanks for joining me for another economic wrap. Let's look at what we're going to go through today. Main things are looking at whether or not the housing prices have bottomed and what's happened with Sydney and Melbourne in particular. We're going to look at those households at risk of default. So when their mortgages come up, whether or not they will default and just how many households are at risk. We'll look at the Vic government and them asking for help and what Daniel Andrews has asked from the federal government. We're going to look at dividends, and more specifically Australian dividends compared to the rest of the world and why they are still so in demand. We're going to look at China trade and the recent announcement on barley exports from Australia to China and changes that's happening there. And I'll fill you in on what one of the world's largest commercial property investors are doing in the recent fund they just closed. So bear with me. If you want to stay on and listen to the full episode, head on over to the Real World Podcast with Stefan Angelini. And if you are hanging on, guess what? Here's a little disclaimer. This is just general information. Please don't consider it as personal advice. If you want personal advice, go and consult a licensed financial advisor. If you want to know why we're doing these updates, we need to watch markets all the time because we manage a lot of money for a lot of our clients. So it's good to stay ahead of the curve. So let's talk about property prices. Now, a lot of experts are saying that Sydney, Melbourne property markets have bottomed. Now, that's because over the last 2 months, prices have actually gone sideways or even up a little bit. So a lot of them are saying Sydney, Melbourne, they're doing well. They've bottomed now. They're going up. Basically, the reason they think that it has bottomed is because of the strong return of migrants and that they're going to bolster prices. So migrants will come into the country and start to buy up property, simply because the Australian government has announced that they're going to allow, I think, 450,000 new migrants to come into Australia in the next 12 months, which is going to be huge. Now, what's happened? So throughout the peak to trough, Sydney dropped by 14% throughout that time. But now, what's happened most recently, for the first week of Feb to now, Sydney prices have increased by 2%, while Melbourne bottomed in March and has picked up by 0.7%. So good news for property investors. And I think hopefully this good news just keeps on coming, especially with the RBA just halting rate increases, which should be good. On the flip side, there are a lot of people that are coming off their fixed rate mortgages, and that's going to mean that they're going to come under mortgage stress. So there are a significant amount of borrowers at serious risk of default, and let's look at exactly who they are. So around 15% of borrowers are forecast to have negative spare cash flow in the next few months. And about 9% of borrowers are expected to run out of savings buffers in the middle of next year, being 2024. So if you haven't known, there's been a big surplus of savings amongst household savings in Australia. And that was one of the things that bolstered the Australian economy coming out of COVID. People still have the savings there because they're expecting their fixed rates to come off, and therefore they've got a high level of in-offset account. But there's only 2% of borrowers that are expected to have negative equity, even if home prices fall another 10%. So a lot of people have bought in, property prices have rose so much that even if they had to sell, they'd still be making money, not losing money based on where they bought their prices at. So that gives us a bit of confidence in a few things. One, in the banks and the bank's stability going forward, but two, amongst Australian households. Let's go across to government and politics. So the Andrews government is in talks with the Prime Minister for more support. So as the financial hangover from the world's longest lockdown bites the state's growing $115 billion debt, threatens thousands of jobs across the Victorian public sector. So basically, Daniel Andrews will be forced to cut Victorian jobs amongst his in Parliament in the event he doesn't get more support. So the state's net debt is expected to grow from $115 billion to more than $165 billion by 2025-26. The interest expense on the debt is $7.32 billion by 2026. So if you look at, 7.32 a year divided by a debt amount of 165, that's a 4.43% interest rate on $165 billion. That's $7.3 just in interest getting paid back to where it's been borrowed from. That's a lot of money. So that's going to put our state under pressure from different rating houses. And what that means is that in the future, if the government ever wants to borrow more money, they have to pay more interest for it. So hopefully we can maintain our rating, and that the Andrews government hasn't done too bad of a job and just spent too much money. Let's look at investing for income and why dividends are still in demand. So it looks like Australia is still the place to be if you are a dividend investor and you want good income. Over the last 10 years, per year on average to 30 June 2022, the Australian share market has averaged about 5.8%, factoring in both dividend and franking credits. So there has been a 4.4% dividend yield on average with an extra 1.4% franking credit. Now, that's a lot higher if you're in certain stocks where you can get up to closer to 10%. But basically, the Australian franking credit system, whereby what this is, if you don't know, a company pays tax, and then when it pays a dividend to you, it gets to give you that tax back. So you can either get a tax refund from it, or at least you don't have to pay double tax. Whereas a lot of countries around the world don't have this benefit. Now, what that does is that forces a lot of companies in Australia not to reinvest the profits they make, but to actually pay out dividends. And that's why a lot of countries and companies in Australia do it. Let's look at foreign trade and the recent, I guess, advance in the trade between Australia and China over our barley. Now, if you don't remember, back in the year 2020, when COVID just started, China came out and went bang and basically put an 80% tariff on Australian barley. And their argument was that it needed to level the playing field because the sector had gained subsidies and Australian barley was being dumped cheaply in the Chinese market. Now, importantly, this was directly after there was some pretty negative comments said about China and its treatment of COVID. So we don't know if it was because of just those political tensions or whether it's actually an economic move. But in good news, Penny Wong has started the dialogue and China has agreed to undertake an expedited review of its tariffs on Australian barley over the next 3 to 4 months. And basically why they're doing this is because Australia said, well, we've gone to the World Trade Organization to dispute what you've done to us and the tariff you put on our barley. And they said, you review it, you give us a lower tariff, and then we'll withdraw or suspend our challenge to the World Trade Organization. So China not going to get any more trouble. Commercial property. Let me talk to you property lovers. Blackstone has just raised $30.4 billion for their latest real estate fund. So Blackstone is one of the world's largest global real estate funds. This is the biggest raise they've ever done. So it's 48% bigger than the previous real estate fund, which closed in 2019, which is $30.4 billion coming into the fund. Now, their focus is on logistics, rental housing, hospitality, lab offices, and data centers. No longer are they really buying up traditional office space, malls, because they just think that post-pandemic, they're facing headwinds and they're not really an in-demand asset class anymore. So good news for property investors. There's still money getting put into the space. There's been a lot of negative comments said about Blackstone and their allocation to commercial properties, but they've just said, stuff it. We're going to double down in the industry because we know we love it and we know it well. All right, that's my little economic wrap for today. Thanks for listening. You go off and have a great